Welcome back to Krown's Crypto Cave, and hey, happy Sunday. Hope everyone's having the best Sunday possible there in cryptocurrency land. It is a very early morning over here in Helsinki. The sun has certainly not come out just yet, but because it is Sunday, we'll be looking at more higher time frame action, some long-term analysis, and let's waste no time getting a live scene right over here as Bitcoin pretty much doing very little in the last 24 hours since we last spoke, and a very one-sided conversation. But basically coming down to this and hanging around this 3,200 area, which essentially is where our 200 simple moving average on the weekly does indeed lie. So just keeping that in mind, yes, we are in a traditional area where typically you do get a bounce. Assets and just the way that bots and algorithms are typically programmed will buy up this 200 simple right over here, which we're currently resting on. Again, the red moving average that we're looking at. Anyways, going back to my fresh GDAX chart, not fresh like my fucking haircut. Anyways, I do want to talk about this. The big things to be aware of course, as long as you're below 6,100, your breakdown point. I am in bear mode territory, meaning that I'm looking for shorts. Yes, there's going to be bounces even when you're doing all of this kind of nasty shit that we've been doing really for the last year. I mean, lower high after lower high after lower high after lower high after fucking lower high. Yes, there will be bounces, but I'm not looking to buy the bounces. I'm looking to short the bounces. That's essentially my disposition right now. So I'm sure people are talking about the daily RSI. Daily RSI. We got some bullish fucking divergence. It's like, oh my God. Yes, you had bullish divergence, all the way fucking through, didn't you? But again, is it time for it to actually play out? Well, going into lower time frames, maybe going into our Bit Mexico chart right over here. We do see some upwards momentum in the early morning hours, and I'm sure that this is making a lot of people think that we do have a nice bounce in play. However, as long as we're being held back by this 3230 area right over here, it's very difficult to get excited about. Not only that, but looking at where the CMEs closed on Friday, which to me holds a shit ton of weight, they did close at this 3130 level. So let's actually look at these back to back, because I do just want to show kind of the what's the word that I'm looking for, the relatedness between these two assets. And essentially you do have, there we go. Okay, do we have hourly on both? Yeah, we should. And you can see over here that yes, CME's closing on Friday left us basically at the same point as here on Bit Mexico and just all of your SAFU spot exchanges. So typically what happens is when the CMEs open back up for business at 6 p.m. Eastern Standard Time on Sunday, later today, you will typically come back and fill the gap. Doesn't always have to be the same day, doesn't even always have to be in the same week, doesn't even always have to be in the same month. I mean, it could take a while sometimes, although this one would be likely to be filled sooner rather than later, I would imagine. I just want to get that out there because, people have been a little bit misleading before, aka Parabolic Trav insinuating that you're going to have like a major move up because you got a gap, when it's like, no, it doesn't mean necessarily just yet, although this one probably will. So again, that's at 3130 down around here, and you can see that yes, if we did pop back down there, the traditional play would be to kind of buy the gap fill, seeing as we are opening or likely to open up here. Now, of course, there's a lot of time before now and 7 p.m. or sorry, what was it, 6 p.m. Eastern Standard Time. However, assuming that we are above that level before that time, well, yeah, the gap fill will typically be a buy for at least a bounce, and probably just that, a bounce. Now, there's a few different plays to be made here, and again, this is not financial advice. I'm not a financial advisor, blah, 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 but blah, blah, fucking blah. But basically, if, the first pass probably does bounce. The second pass, if it's coming down on the spot exchanges, then that's probably going to be a sell. And if Bitcoin actually does sell off beforehand and find itself below the gap when CMEs open, then that's probably going to be a massive sell as well. However, for now, trading above, and that's essentially what I'd be looking for. Anyways, going back to our singular view over here. Come on, baby. It just looks like I'm being a little bit slow myself this morning. And we can see on our Bit Mexico chart right over here, there we go, that yes, when Bitcoin does, and just assets in general, not just Bitcoin, but when assets do kind of put in this rounded formation right here, typically that does actually insinuate that we will be bouncing. This is a little bit of an accumulation formation actually. So Again, it's very difficult to get excited about anything as long as you're below 32.30, but it does look like we very well could bounce. And coupling that with what I opened up with, looking at the weekly 200 simple moving average, you do have to be thinking or defensively here, especially if you're short. And yes, I actually did close. I did close my scalp short from 33.50 on my December futures, and I'm still holding some positions on my options over here. So just kind of letting that go right now. I will cover if we do start closing dildos back above this area right over here. But for now, it is playing defense along that area. So just denoting what I'm seeing over here. Overall, though, of course, nothing has actually been taken out. If you actually zoom in right over here, the clear rejections of this trend line at 32.35. Again, doesn't need to be exactly like that. And this is more of like a block, right? We saw Bitcoin basically get stuck down here a couple of times. So if you really wanted like the no bars, no holds barred action, if you could get back above 32.70-ish area, then yes, very, very likely that you come back up and at least test like 3300, 3350-ish area. Again, that's not really saying too much because these numbers are like getting relatively close to each other, but that would be the breakdown from this prior consolidation right over here. So again, I do like that for a potential short on a retest. Now, of course, this is the thickness of just a shit ton of formations coming around this area. So here's the thing, and this is where things get a little bit more complicated, but I'm sure that the people tuning into content like this will understand what's going on here. So basically, very low time frames, hourly over here. What did we have? We basically had a bear flag, right? We basically had a bear flag coming into the week, something like this, right? And measure move on the bear flag. Well, we can make that one out and just apply that to the breakdown zone, and it'll put us somewhere down around there. And we'll get to that in just a second. Then after the bear flag was put in, well, we basically broke that to the downside right over there, and put in a little bit of a base right there, and then made a broadening wedge, another bearish, and broke that to the downside. Now the broadening wedge obviously has a measure move, basically the same thing as fucking bear flag. And then as you can see, once it started to get stuck once again at this 32.30 level, the area that we're currently getting rejected from, we put in essentially kind of like a continuations head and shoulders over here. It doesn't happen all that often, but it does happen, and Bitcoin actually does have a history of kind of playing them out. So let's actually do this guy right, and we'll put him down right around here. So we do have a bunch of measure moves kind of pointing down around this area. Let's go see where they produce. Also, we had this descending triangle right over here, although not too relevant to what I'm about to say. Anyways, scrolling back on out, and let's see where these actually point down towards. Yeah, there we go, right around this 2800 level. So a lot of things pointing down that area. Now, again, this is where things get, again, a little bit complicated. As long as we are living below this 3230 line, all of those are in play. The second that you start closing dildos back above that area, then yes, they do go offline, or at least the head and shoulders one will. On top of that, the broadening wedge support right over here. I mean, technically that we'd have to get back above about 74. 74. Oh my God, man, I'm so off base. 34.25-ish area right over here. If you can do that, then yes, those will start to go away. And then of course, for a bigger consolidation right over here, as long as you're below 3600, that still is in play. It means you can come all the way back up to 3600, get rejected, and then head down. But just kind of denoting a few different things to be aware of over here, because there is some significance if Bitcoin does get back above, this 32, let's just call it 3250-ish area. Yes, I know that it's kind of like a zone, right? But it's just easier to say that. So again, above 3250-ish area, then yes, it looks like we'd probably get that bounce up into about 34, maybe even 3500. And then if things get really crazy, maybe you even do test 3600. This is going to be a very big test, a very big revealing factor in this next coming week to see how Bitcoin reacts after again getting to this 200 simple right over here, which again in traditional assets, a point of strong contention. Usually that is just going to be bought by the nature of it just being the 200 simple, the way that bots and the algorithms are programmed, and the way that just the whole group think around it is, well, typically does get bought up. Now, last week we actually did test this area now didn't we? So again, coming back down to test it again, that is not necessarily the best thing. So yes, it is very likely, and it is very likely that we actually just, don't do that and just break through. And in fact, when we have, what was it, 3 or 4 bearish patterns, going back now over here to our bit Mexico chart. Yeah, we had the bear flag, broadening wedge, then head and shoulders, and then this overall descending triangle right over here. When you have 4 bearish patterns within an overall bearish market, I'm gonna put more weight on that. So yes, as long as we are below this area right here, I do believe that we will be heading lower and probably filling out those measured moves down to about the 2900 level. The second that this gets taken out, though, becomes a little bit more complicated. So putting also into context what the CMEs are doing with them with them closing on Friday at 3130. Well, you have to wonder, okay, well, we have a lot of things pointing down that area. We very likely at least come back down to that area to fill the gap. And then from there, I would imagine that likely the bounce gets fade. Again, when you're talking about probabilities, when you're talking about statistical setups, in a bear market, bearish patterns, bearish formations, with all those things kind of stacked up against it, yeah, I will lean towards that way. Although, yes, I have taken in some of my deltas. I'm pretty much neutral right now with, basically just short some out of the money calls. Not really wanting to add anything here because I don't like doing too much on the weekends. So, okay, so that's the lower time frames right there. And now let's get up into some more long-term analysis, because I think this is what I really want to focus a video like this on, especially on a Sunday when we have the new weekly coming out. So again, resting on the 200 simple right over here, but we have broken for the first time in Bitcoin's history the 200 exponential, that purple line coming in right around about 4,200. We'll call it a few ticks under 4,200. So again, this is the first time in history where Bitcoin's both opened and closed dildos below this area. So I do believe Bitcoin will be below and living below this 4,200 area for quite some time, as the fact that it has actually done that shows that the bots and the algorithms and just the market in general has great agreement and conviction in living under, and comfortability living under this area for well, the foreseeable future. Again, I think Bitcoin could bottom out, probably, like sometime in Q1 of 2019, maybe if things get like pretty bad with traditional markets, which we'll go over as well, maybe Q2, tentatively speaking. I'm not married to that decision, though. I'd rather talk about prices, which we'll get into just a second. But as far as like getting back above this area, that's going to be a pain in the asshole, and let alone getting above 6,000. I mean, it's not even in the back of my mind right now. Anyways, okay, so putting on these guys right over here. Now, let's just kind of round out that next area that we were looking at. Remember, all of those measure moves are pointing where? 28 to 2,900. Well, where's this next blue box territory that I'm looking at right over here? 28 to 2,900 is the top side of it. Goes all the way down to about 2,350 to 2,400 down around here. This matches up beautifully with some nice horizontal supports. Actually, a very important area right over here. You had this spike low in September of last year, 2017. If you remember this was one of the many times that China banned Bitcoin. So, it pops back down here. Immediate reaction up. Very, 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 very good volume supporting that move, and continues its uptrend onwards and upwards. So when you look at something like that, that is going to provide a nice area, and definitely an area of interest going forwards here. So yes, I am looking towards this 2,900 level right over here as a top side, and the 2,400 level right over here. Not only that, but we do have the 886 Fibonacci retracement coming in around this area as well. And if we put in the volume profile, we do actually have some nice higher volume nodes coming around this area as well. Now, you will notice that at the current moment in time, we are hanging on to the last high volume, or this is not really a high volume node over here, but it is a higher volume node, I suppose, in comparison to the next one right over here, which is just nothing. And my point is that, hey, the second that you lose this guy right over here, there ain't nothing doing all the way until this next blue box territory. So assets typically like to float towards periods or places of higher liquidity, and that is what this kind of suggests as well. So a lot of things, point in this direction. We got measure moves, we got volume profile, we got Fibonacci's, we got some nice horizontals, and some very historical areas as well, actually. Not only that, but you will notice as well that this diagonal trend line right over here, which Bitcoin is currently actually would be breaking if it closes here or lower by 7 p.m. Eastern time, when the weekly dildo does indeed close. Well, that actually does start to make its way into this mid 2000 area pretty damn soon. So will we be walked along there, along this guy right over here? Well, it's very possible. Bitcoin has kind of initiated the next phase of the bear market cycle, in my opinion, where basically instead of like straight flushes, and when I say straight flushes, I mean like this shit right over here, where you just flush straight down, basically from 6,000 to 4,000. A pretty intense move, no matter which way you cut it. It's kind of initiated the next phase of the market cycle, in my opinion, where instead of doing flushes, you're just getting like that slow rollover type shit, because we're basically trying to figure out where the fucking buyers are now. And until any sort of buyers pick this asset up, it's probably just going to keep on doing that until you either get something that just bores everyone to death, or it looks like your typical violent capitulation. So a couple different ways of getting that. You don't need to get it in like the most an aggressive move ever. Yes, it makes it a lot more obvious, and it would make me a lot more confident. But hey, doesn't need to happen. So yes, we are kind of just rolling over right over here. The move overall, is kind of losing volume. So yes, it is getting a little bit. That is telling me that yes, it is getting a little bit more matured in its formation. Definitely doesn't mean that it's ending anytime soon. Again, I do believe that Bitcoin's going to be living below 4,000, 6,000 for quite some time. But this will definitely frustrate a lot of people. I mean, the one thing, people were actually like kind of in a way masochistically happy, I think, or in a way like masochistically like interested when they see Bitcoin go from 6,000 to 4,000. And I'm talking about like the hodlers. Obviously, shorters are like happy as all fuck. Doing cocaine parties and hanging out with polar bears. Like their pet fucking polar bear. But hey, for the hodlers, it's almost like interesting when you see it like this. But when things slow up and things like really just start rolling and get that really slow moving molasses type price action, that's fucking painful, because most people can't deal with time. Time is a very difficult it is a very difficult factor. So yes, that is one way to kind of actually induce capitulation like behaviors. Remember, capitulation is an emotion, not necessarily like a full-on chart pattern. I mean, people are typically familiar with capitulation as this guy right over here. This Jesus, get the fuck off there, you shitty volume profile. This guy right over here. My God, my like autistic rage is getting in the way now. But this guy right over here, which is a pretty hefty move, right? It's like about a 69% move from bottom to top of the neck in about 1 week, in the span of about 1 week. Well, yeah, you can get it that way. You can also get it by just going sideways for fucking eternity and just boring people to death. So yes, that's what I'm looking at right over here. Now back to this diagonal trend line right over here. That we do have a very similar thing going on in 2014 as well, where basically Bitcoin had based on this area once, twice, and bottomed on this area. Also on the 886 Fibonacci retracement, by the way, which yes, the 886 does round out the bottom of this blue box territory. Coming up. So again, is that the way that it gets walked down over time? Perhaps it does. We have a lot of very similar things going on between these areas. This diagonal trend line does encompass that first consolidation before the bull trap. You can see the breakout right above it. Bull trap, obviously traps the bulls. That's what it's supposed to fucking do. And then you head on down. Now, with that said, let's actually talk a little bit more why this is likely to take a long time, and then I'll get on to our next kind of exhibit, I suppose. And so this dotted trend line right over here. Remember this dotted trend line going to the genesis of Bitstamp that's never been broken except until 4 weeks ago. And remember, that's never broken in Bitcoin's history of almost 10 years. So it's broken on this dildo right here, and then retested on the following dildo right over here. You get a nice wick up, and then boom down, saying, "Hey, no, thank you, sir," or "ma'am," because we're not gender stereotyping here. If any social justice warriors are listening, and that was the same dildo that also did confirm a kill of this purple 200 exponential moving average. Which, remember, to get a confirmed kill, you need to both open and close below it. Well, to me, that does say that we are respecting this area, and that is likely to be a governing feature going on forwards here. Now, let's actually extrapolate this to a little bit more now. Okay, so going on over here into the matrix, we're going to go into the matrix, and I've added a few more things here, and we're going to really get deep and dirty into this. each and this is where things get a little bit crazy. Make a lot of assumptions here. Just want to get that out of the way. But hey, let's talk this one through. Okay, so each and every one of these dotted trend lines that represents a support trend line of a parabolic market cycle in Bitcoin's history. You have this first one over here from 2010 to 2011, and that's the support trend line, right? And and then once you break it in your accumulation phase, right over here, that becomes the highs and the governing factor of your next market cycle, right? Also notice that I took a Fibonacci retracement from the ultimate high to the low of the prior market cycle, or the beginning of this one. And where was your ultimate low at in in this first market cycle in 2011? Well, it was actually over here at the 942 Fibonacci retracement, which was, by the way, about $1.96. This is on logarithmic scale, so it's gonna look kind of crazy. Now we have our next parabolic market cycle, beginning after that, essentially. And that is denoted by our support trend line from here, using the anchor of the low of our prior market cycle, and the and just kind of following up on the uptrend from that. Now this gets broken in 2015, and that becomes the governing factor of your 2018 market cycle. That's where we did find our high. Interesting. Okay, let's take a Fibonacci retracement on that as well, from the ultimate high to the ultimate low of the past market cycle. And as we saw before, the 886 is where you actually do spike down right over here. So again, we do have a retracement to the 942 and then the 886 in 2014. Then we create a new support trend line, right? Going from the low of our 2014 to 2015 market cycle right over here. Well, which one is the one that we just broke? That was this guy right over here. So it's just this guy right here. And that is the one that we broke right over here. So does that become the governing factor going forwards over here? Again, this is making a lot of assumptions here, and technically speaking, we don't necessarily have a trend, because you need 3 times to make a trend, and we really only have 2 to be going off of, like, exclusively. But hey, it is worth mentioning right now, because it's just kind of fun to mentally masturbate. That's why. Anyways, as I struggle for searching for words, I did not get enough sleep last night, by the way. Anyways, does this become the governing factor going on onwards and forwards? Well, it could be. It could. Now, here's the thing. Do we see the support trend line of the next market cycle forming? Because we can make a nice another nice dotted trend line for this guy right over here, leading us into 2018, which would be rounded out by the 942 Fibonacci retracement down around here, actually between the 942 and the 886. So it is interesting to me that, yes, you do find yourself somewhere around this area, and perhaps we could find a way actually forward. So again, I'm making a lot of assumptions here, to be very, very clear, but it is it's fun to talk about on a Sunday. So if you were to follow this diagonal trend line right over here, remember, encompassing the first consolidation before the bull trap of 2018, just like you did in 2014, and I'm sure we could make one in we actually could make one in 2011 as well. This guy right over here. There we go. And you actually did base off of it once, and that was your bottom, funnily enough. Over here, you base off of it once and then twice. That's your ultimate low. Could it be over here in 2018 that we base off of it? Well, we've already based off of it once. Could we base off of it a few more times and walk our way down into this next territory? And perhaps that is where the bottom is. Again, it is interesting to me that this area does kind of line up with that 1500 mark that we've been talking about as well. Again, going back to our Bitstamp chart, as I think is best shown there. Yeah, this third blue box territory right over here, which would be the prior high of your former market cycle, which is also, as we can see, if we pull this away, it's the 942 Fibonacci retracement right over here as well. Actually, it's pretty hard to see, but it's down around there. So again, a lot of things kind of come into play right over there. And going back to my BLX index, you'll notice that some of the numbers are off by a little bit on this. And that's just because this one includes tether exchanges. So the premium does kind of fuck things up, if you're wondering like why the numbers aren't exactly on. So when you do get to these lower numbers, yeah, they're actually off by a little bit. Okay, so anyways, that, again, major assumptions being made. Always want to get that out of the way. Major fucking assumptions being made. But hey, that would, at the point of intersection, which is, remember, you did put your bottom in over here at your point of intersection, between these two areas. Well, that would be in May, or sorry, late, yeah, the very end of April of 2019. And also, you'll notice that there's this other solid trend line right over here. Well, that is the trend line. That is the resistance of the parabolic top and the bull trap, and the bull trap area of 2014. We can do the same thing in 2018 as well, taking the parabolic top right over here and then aligning it with your bull trap area. And that would be coming in meeting price action somewhere along here on November of 2019, early November of 2019. Why am I talking about this? Well, in 2014, when you actually did break that area finally, that was the beginning of your bull market. Looking right over here, if we were to break this area, which is actually around 2400, by the way, the lower blue box territory, or the secondary the secondary blue box territory, I should say, could that be actually timing that as well? Again, major assumptions being made, but it is interesting to look at. So let's go back now over here and talk a little bit more about, I did forget to round out my ideas on the lower time frames for a second. So let's go back to this over here. Again, remember, as long as we're below this area right here, I will essentially be leaning to the bearish side, and I probably will start another short if we get another fucking rejection. I probably will, just for a scalp. But for now, I'm cool with just being neutral. I really don't like making trades on the weekends. Just doesn't. It's not really indicative of where the price action is really going. But again, do we have anything else kind of pointing to the downside? Besides just the fact that you have lower highs for the last fucking 12 year, over a year now. Well, if we go over to the weekly right over here, you have just about every bad exponential moving average cross that you could have. On all the higher time frames up to the weekly. Yeah, 3-day over here is death cross. That's a green 55 cross on the downside of the purple 200. The reaction has been actually pretty immediate. Funnily or not funnily enough, 3-day stochastics not even getting a chance to cross the upside as well. Again, this is why I don't care about things being quote unquote oversold or overbought. It's a meme. It's not real. There's no such thing. People are going to be talking about bullish divergence on the 3-day RSI over here as well. It's like, no, there's none. You need a stopping point first, and you don't have that. You have nothing to compare this guy, which is a local low, with something else. So it's until you actually get another local low, it's just a floating thing in space, mon. We're just fucking talking monkeys, talking about magic and money right over here. So again, some pretty nasty things right over there. And again, back to the weekly. You will notice all of these higher time frame exponentials starting to migrate below. By the way, daily, I believe, has seen, do we have the, we're just getting to the 6100 level on the purple 200 exponential and 200 simple moving average right over here. So, by the way, just putting more and more intense price action or pressure on price action. All right, so back to the weekly, and to round out that idea, because I keep on getting sidetracked by my own statements, which I do apologize about. It must be really annoying to follow, as I haven't really had any coffee this morning, unfortunately. Maybe I am addicted, but basically on the Challenger bands right over here, which again, not my favorite way of doing things, but a good secondary confirmation tool going off of the actual price action, which I do put a lot of weight on, and in the exponentials, which I do put a shit ton of weight on. We are trending below this lower Challenger band right over here. So as long as Bitcoin is essentially outside of the lower Challenger band, yes, that just means that the trend is extremely strong. Again, people will look at this and just naively say, bro, I've been studying the Challenger bands for like 3 months, okay? I've been trading on Binance, all right? I use the stochastic RSI, and I also use my Elliott waves, and I got my what's the other fucking Asian one? I got my my Renko whatever the fuck, you know what I'm getting at. And my TD sequential, okay? And you know what? When shit starts trending outside the lower Challenger band, it's just too much. It's got to go up from there. It can't go fucking lower, bro. Well, unfortunately, that just means the trend is extremely strong. Now, yes, at some point in time, it's very likely to pop back inside, but until that actually happens, the trend is just more likely to continue downwards, and that can go on for quite some time. I mean, over here to the upside, you trended outside the top Challenger band for a couple months. You did over here again for a couple months. I mean, it's actually quite frequent to the upside. So you can definitely do it to the downside as well. after we spent 1, 2, 3, and working on 4 weeks below it. So again, as long as we're closing Trollinger bands below the lower band, yes, I do look for continuation as well from this from this indicator. Which, by the way, the lower Trollinger band on this guy is coming in around 3,600. So again, Bitcoin has a lot of work to do between now and 7 p.m. Eastern time if it is going to actually put itself back in there and insinuate a big bounce is likely incoming. Now, by the same token, I look at this guy right over here, and you can see that not only are we trending outside the lower Challenger band, but we're like getting rejected from getting back above in it as well. This guy very, very clearly as well, and this guy just pushing off the lower Challenger band very easily. So to me, again, just kind of saying that things are like to continue. Now, it is interesting to me, though, that the 3-day Challenger bands are inside the lower bands, and while you are inside the lower bands, you aren't necessarily putting in a low just yet. And that actually does still offer up the opportunity to take a stab at your lower Challenger band, which is coming in where? Right around 2,400, which now is coming in around 2,400. Yesterday was coming in around about 2,600, 2,700. So yes, we are fully encompassing. We are fully encompassing the second blue box right over here. Again, this area right over here. So a lot of things actually coming into this area, and yes, it's certainly not out of the question that Bitcoin does strike it sooner rather than later. Does it do it in this rolling over fashion where we just like slowly slink down, or does it get some nice violent move? Well, again, it does seem to me like Bitcoin is kind of entering that secondary phase where things do kind of slink about. So yeah. Okay, just want to get back now over here. I guess we should talk about also the monthly, because that is a higher time frame. People don't realize that it exists, but it does. It definitely does. And let's go to the BLX index on this guy as well. Okay, so BLX index has done something that it hasn't done ever since 2014. It never did it before 2014 ever, actually. So the second time in history, it's both open and closed a monthly dollar below the median Challenger band, the skid mark reddish brown moving average right over here. And that does typically insinuate, again, if you're a Challenger band practitioner, which I am, I wouldn't necessarily say that I am, but I do know how to use it. That typically does insinuate a test of the lower Challenger band is in order. Now, does that always have to happen? No, it doesn't. You didn't do it in 2014 when you actually broke it right over here, but this thing is coming up like extremely rapidly right now. It's currently at $700. Last month it was at $350, $350. So it's almost doubled, or it quite literally has doubled in the last month with just one tick. And I'd imagine that once we do get to January, it's likely to make its way back up here to about 1,100, 1,200. Now, I completely forgot to go over this, and this is very, 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 very important, but there's an unspoken rule in technical analysis that the highs of your prior market cycle become the lows of your next market cycle. And when I say that, I mean on a closing dildo basis, not a wick, as you did get over here. And I can just show this in, and yes, that is kind of the way that it did work right over here. You didn't necessarily, you never closed any dildos below your prior high, on a body basis. Now, taking these back off again, you can see that, yes, if we were to come down around here, this 1,100, 1,200 area, where would that be in around? Well, that would be around our 942 Fibonacci retracement, going back to our Bitstamp chart, as that one has like the more accurate prices if you're using US dollar. And that would also line up with our next massive high volume node territory, if we just kind of get this right. Yeah, so once, if Bitcoin were to break 2,500-ish area, the lower portion of this blue box territory, also the 886 Fibonacci retracement, and also these nice horizontals, then yes, I would start looking towards this 1,200, 1,300, 1,500 area, whatever you want to call it, somewhere in that range would look about right to me. So overall, yes, that is that likely? I'm not necessarily inclined to say that it's likely. My opinion is that it is. My opinion is quite bearish, and just with the way that we kind of sold off so quickly into this area without really having, you really wanted to have a bigger bounce at this 4,000 level. We did have, to be fair, we did have a bounce for about a week and a half, but I really wanted to see it put in some time. Instead, it just kind of fell right through. So to me, that does make me a little bit more bearish, make me think that the possibility of it coming all the way back down to retest the prior high of its former market cycle is more likely, especially with all these things coming in line right around there. And remember, the BLX index with our matrix over here showing that a potential bottom could be had in that area around the 1,500 mark. So again, does that offer up potential for it? Certainly it does. The trolling bands would agree as well. So a lot of things coming into that, and I do want to get on over here to the actual exponentials for the Trollingers as well, because I keep on jumping around. I do apologize about that. Again, no coffee this morning, so I'm a little bit slower myself. I probably just sound like a crazy person to anyone listening, but hey, you know what? Sometimes technical analysis works. Anyways, yes. So monthly over here on my exponentials, which I do put a lot of weight on. Trollinger bands don't really care too much about. Exponentials, simple moving averages care a shit ton about. Exponentials much more so. And we have broken the yellow 21 exponential for the second time in Bitcoin's history, ever since 2014. And from a more traditional standpoint of especially where I come from, if you're not familiar with my background, I was, or I guess I still am, as I'm still registered as a market maker authorized trader in U.S. equity options on New York Stock Exchange, ARCA, where I used to be an actual floor trader, making markets in equity options. So what I used to do to denote if a stock was generally bullish, generally bearish, is I'd look at the monthly 21 and see 21 exponential, this yellow line right over here, and say, okay, we above it or below it? Because if we're above it, we're generally bullish. If we're below it, we're generally bearish. Well, over here you can see Bitcoin is now breaking below it. It closed its first dildo below it, and now it's very likely to open and close its first dildo below it ever since 2014. Both opening and closing dildos below that area is a confirmed kill of that area. Not only that, but we had our first pass on that first monthly dildo, taking us all the way down to the green 55 right over here, which did initially bounce it, but the reaction was extremely lackluster. You got a very, 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 very lackluster bounce, and then you came back down to the green 55, and that's typically going to be another sell. Now, obviously, it's too late to talk about it here. Obviously, I mean, like, clearly, if you've been tuning into this content for like the last, well, really 8 months, we've been talking about this, but in the last like month or so, when we actually had this price action to look at, that was a big sign that we were likely to head lower, and where we likely to head lower to from an exponential standpoint, well, probably this cyan 89 exponential, which is coming in right around to 2300, 2400, which, by the way, where is that? That is again in the secondary, in this blue box territory that is currently below price action right over here between, again, 24 and 28, 29, whatever you want to call it. So again, a lot of things coming around there. Let's talk about why what we've seen so far also isn't capitulation in the more traditional way that you look at it. Well, first things first, Bitcoin's giving you 1, 2, 3, 4 chances to essentially buy the bottom right over here, especially within about 5% of it, which is very, very generous. Now, in my experience, assets are not that fucking generous. In fact, they are pretty fucking mean. They will give you about 15 minutes to an hour to buy the bottom, and then never return there again, or at least anywhere near there again. A great example is over here in 2014 in Bitcoin's life, where you put in your capitulation low right over here. That was and you bounced up almost 40% immediately, and then within the next weekly dildo closing, you bounced up about 69%, which is fucking amazing. To put that in perspective, if you were to do that from right here, that would literally bounce you up all the way to about 5,400. Which, again, remember, we have a shit ton of shit above this 4,200 level right over here. So that seems a little bit out of reach right now. Just as an aside, if again, I almost feel dirty doing this, but going back into our matrix, let's just postulate what would happen if we bounced up that amount from our lower territory right over here, our potential bottoming area. Well, that would put you right over here at about 2,900. Interesting. Very, very interesting. Anyways, okay, so back on to the lower time frames right over here. Sorry, no. Back on to the bitstamps over here. So, looking at that and looking at the reaction, we have basically no components of what would be your typical violent capitulation, signatures. The reaction is not good enough. It's giving you way too much time to buy the low. I mean weeks, not just like hours, but weeks. I mean, look over here. After you put in this low, you never get anywhere near. You get this other wick right over here, right? But that's 30.5% away. So is that anywhere near? Not really. Not really. So Again, way too generous, way too long, and also the volume on it is not good enough either. When we're talking about capitulation volume, I need to see something that is just head and shoulders above anything else that is available on the chart in the most recent price action. You can see that this really fucking stands out, just like your parabolic top over here, just like the move taking you out of this accumulation phase over here did as well. So, you look at this and compare it with what we're doing over here, which they're not comparable because this is measured in coins traded, not dollars traded. So they don't need to be like, this doesn't need to be comparable to this, but the size and relative size of this to this relative price actually needs to be comparable to that, when it's not. It's just fucking not. What this looks like over here is like what this kind of, stutter step over here after the nice breakdown looks like to me. Now, what I'm really looking for is something analogous to what we did over here. And remember, this is measured in dollars traded, measured in coins traded, not dollars traded. So if we were to look at this and make this into dollars, well, the average price of Bitcoin was about 8,000 to 9,000 right over here, whereas over here it's about mid 3,000s, we'll call it. So really, when you look at volume over here compared to over here, it's like double. It's like fucking double. It's more than double because you even did more over here to begin with. So still, is that capitulation? No. So volume doesn't work. The time doesn't work, and the percentage rebound doesn't work either. Also, if we go over here to an external factor, the MVT signal, this is a completely external thing from all of the things on the charts that I'm looking at, and it's basically the network value divided by the daily transaction value and then interpolated using forward, backward, moving averages to create a smooth line. Okay, that means very little, but it creates an oscillator over here that's called every top in Bitcoin's history perfectly, including the one in 2017 and 2018 right over here. And each and every time it gets above where my CRIS currently is, that is a market cycle top. After that, it typically does go down to where my CRIS currently is now at this 50 mark or a little bit lower, and puts in a market cycle low. Well, as you can see right now, we are currently in between about 50 and 100, so it is making its way down. It's certainly making a lot of headwind, but still not there. It's still kind of saying that at the very least you're probably going to go and at least tag this area right over here. And actually, the more that you look at it, each and every market cycle low is lower than the 50 mark. It's just not by that much for some of them. So again, just something worth considering. Okay, all right. So we covered that. Man, I hope I'm getting everything that I want to say here. Let's go check out GBTC. What does he look like? I think he had a pretty nasty close on Friday. Yep. Again, resting on, or actually breaking our lowest support right over here. So could this be a very nasty, bloody tampon Monday for GBTC? Don't really have much holding it up after this until about $3.44.5. But that's not really a strong support. Your next big strong support, strongman support, is $2.80 right over here. $2.60 right over here. So yeah, GBTC has been a great leading indicator, showing the path for Bitcoin. And if I'm looking at this, I'd say, yeah, that would also be pointing down as well, saying that we're likely to go lower from here. Let's go check out traditional markets, because again, traditional markets have been highly correlated with cryptos. I mean, cryptos have been correlated with traditional markets. Jesus Christ, man, they're both considered risk on assets. To I know that your friendly neighborhood crypto anarchist would tell you otherwise, but as far as charts goes, as far as the data goes, that is incorrect right now. When we look at this, we can see very, very clearly that that Bitcoin does play the critical moves alongside traditional markets. So I'm going to look at SPYs over here, and we have now officially broken my 263 area right over here, which to me is saying that we're getting ready to go lower. This is now pretty much confirmed in my mind as a topping formation, although technically speaking, yes, you do want to see 257 broken, but I would certainly be comfortable taking positions now. You have the daily double death cross for the, well, I mean, it's happened multiple times in the history of this, but it's the first time ever since 2015, which produced quite a nasty move right over here, and the time before that was 2008, which was an extremely aggressive move right over here. So again, looking at this, you do kind of notice that it's. I mean, this is a little bit of an exaggerated response. Don't get me wrong. Am I saying that that's going to happen exactly right over here? That's not for me to say. I don't really have like too many great targets on this guy. I can also see that yes, the weekly has smashed through the Cyan 100 exponential right over here. But I would be looking at 235 to 240-ish area. It's also a measure move off this head and shoulders pattern, which, yes, it is a head and shoulders. It does have all the right characteristics of it. The volume does work out, and it looks to me like we are getting ready to roll on this. Yeah, so it's pointing down perfectly right over here to about 235, although I think that it very well could go lower. I wouldn't be surprised if it does break down to about 220 to 215, this kind of support ledge right over here. Monthly is quite bearish as well, but again, remember, a monthly needs to be played out on a monthly dildo time frame. Major bearish divergence on the RSI, which is already in the neutral zone, to be fair. Major bearish divergence on the Stokes, which is just getting rejected from the more critical zone. So, yes, I do believe that this is likely to go lower. It's probably going to give you a little bit of time as well, though, because we haven't officially broken the 21, the yellow 21, on the monthly dildo time frame just yet. And when you do, you'll probably get a retest, and that'll probably be the actual lovely short. But for now, yeah, definitely looking, or I shouldn't say definitely, but very much looking like a top to me, and very likely to go lower, very likely to lead this guy lower. So let's get back on over to Mr. Bitcoins over here. I forgot to look at where the 10 simple is on the daily. I've been neglecting that guy recently, but I do want to see where he's at, because as long as you're below there, you really should be holding shorts. Yeah. So he's still around 3,300-ish area. So again, if we did pop back up and test 3,300, I'd actually short that on the first pass. And as long as we're living below this guy, I do believe that is, traditionally speaking, that is, the thing to be doing, is just to be short. 4 hours now looking like a rejection of the 21. Remember, CME is also going to be opening up about $100 lower than a current price action as well. So it is kind of likely that we do head back down. What else do we want to talk about in this guy? Yeah, let's talk about the longs and shorts of it all really quick. Where are my longs and shorts? Yeah, there they are. Okay, so we got longs on the nope. Yes. Okay, so we got 33,500 open longs over here. Remember, this is like very incomplete type shit, but this is also a little bit scary right here. So remember, this is represented in coins traded, not dollars traded, which we'll get to in just a second. But we do have about, what is it? We went from 27,000 to about 33,500 coins long over here. So we've gained about what is that? 6,000 coins long in the last few days. So 6,000 coins are being added long in the last 6 days, which, where would our average price be? I mean, it would be somewhere, Jesus Christ, in the last 6 days, it would be somewhere right around here, right around 3,300. So if Bitcoin does get back around there, that'd be a fucking massive sell, in my opinion, because those people are probably just going to try to get out at break even. Compare that with the shorts on the table, which is pretty damn high. I mean, I can't believe I just said that right now. Sorry. I apologize about that. But shorts have added a little bit as well. But basically, this whole red dildo action right here took away all of the more aggressive shorts, and now they're building up once again. So to me, it's best to represent this in dollars traded, but also keep in mind that shorts are actually kind of running the price action well, first off, they're on the right side of the fucking trend, but second off, they're running price action, meaning that they are taking profits on their moves. Now, they're not doing it in the very strong way that they were in the very professional way that they were doing it on the break from 6,000 over here. Boom, put it on, then boom, take it off, boom, put it on, take it off. Then it kind of got less and less. But over here, did clear a few of them out. Now here's the thing, though. You represent this in dollars traded, and it's a completely different story. This is Bitcoin's longs versus the dollar, and basically you can see that it's absolutely fucking nothing on the table right here. So people could put on longs people could put on a shit ton of longs if they want to. My point is that the coins that are long right now are underwater and would be feeling a little bit of pain, but it's really not that much. And you compare that with shorts, it's the same sort of story over here. That people will be talking about the shorts are too high, the shorts need to be spanked, Daddy Back needs to come in here and spank all these damn shorts, make me stop being so fucking wrecked. Well, unfortunately, for you, the shorts, my honorable hodler, are really not that high when you look at it in dollar terms. You can certainly put on a lot more. It can certainly go a lot higher, because remember, it's measured in coins traded. So when Bitcoin is 2x, 3x lower than what it was even just a few months ago, it's going to be a lot easier to throw on a shit ton more shorts. So let's go look at Datamish over here and look at the rates that they're paying. Short interest rate actually is a little bit on the higher side. I would not say that it's necessarily high just yet, but it's getting up there. It is getting on my radar now. Anything above 0.05% and above is where it starts to get a little bit, it starts to make you think, okay, do I really want to be holding 1 million contracts short per day? So you're going to start paying on that. Longs over here, they are just begging you to be long. There's basically no fucking interest rate for that. We have about almost 4,000 hedge shorts, so really we have about 35,000 open shorts. Remember, compare that with your open longs over here, which is about 33,500 open longs. So really they're about on par with longs being underwater. So to me, that's actually quite bearish as well. So again, when you actually dive into these things, a lot of crypto YouTubers and fucking TradingView people and crypto Twitter people here will make things like will greatly simplify things into it not being useful and being very misleading. And I just wanted to show this is how it like actually looks like. Okay, so we covered that. We covered traditional markets. We covered GBTC. We covered. Do we want to talk about XRP? Do you want to talk about XRP for a second? All right, let's go check it out. Let's go pick on him for a second. So yes, the alts have also been a canary in the coal mine. XRP actually testing the 10 simple, getting rejected from it. So does Bitcoin even get a chance to test it? I don't know, but basically, we saw it come into this area right over here, just reject. I mean, I didn't take a short off this or anything like that, but just bad price action. And we were talking about this about 2 or 3 months ago. Once you got this rejection right over here, that was likely to be a trap. And again, I don't really trade alts, but and this is not financial advice, I'm not a financial advisor, but that was your big signal to say, hey, this thing is likely going to join the rest of the market in the gutter. Next support around 27 cents. If it does break that area, that's where things could get very nasty, as the next big supports are in the high teens. So again, Mr. Ripple, just being a representative of the market, one of the better representatives actually when it comes to the chart formations, because it's not like fully retracing its whole fucking its whole do over here, whereas most things are, but still not looking good either. I mean, don't get me wrong, this is a dog shit chart to begin with, but everything's like a various degree of dog shit right now. So going back to the Bitcoin right over here, I think I am getting to the end of this to the end of the stream. Perhaps we'll go over here just for a second, check out the total market cap. Sorry for the blinding white over here, but I just wanted to show that we actually are kind of in free fall mode on this guy as well, and the next support would be around the 987 billion mark. Below there you got 676 billion, but you look at this right here, and this can really retrace a lot. And this is what I really want to show why I don't care about the total market cap, because it includes like every last little shitcoin out there in the world, and a lot of these things, in my opinion, will probably not be traded in the coming years. So just go to CoinMarketCap page 2 and just have your mind blown with what kind of, it's like Dentacoin, teeth on the blockchain, and pair that up with your fucking like pink coin, pussies on the blockchain. Because if you don't get that registered on the blockchain, how are you going to register your Lubin coin? And you can't have that without your pube coin too. So again, all this sort of shit does come into, it's like, what really is the redundancy of this? So yeah, that's why I care most about just looking at Bitcoin, because it's going to get things the most right. And yes, this now is a rejection of this area. Do I start a short? I'll probably put on a little bit of a short. Man, I really hate taking trades during the weekend. I'll probably just do it with calls. Probably just sell some more calls over here. Yeah, they have a decent amount of premium. So yeah, that's gonna be my strategy for now. Again, keep in mind the weekly total close. As long as if we can close below the 200 simple, which again is 31.75, that's gonna be very fucking nasty. And by end of day, remember that when CMEs do open up, they will be opening at 31.35. So check the bounce on that. There's play to be made on that typically. Or perhaps a massive sell on it as well. Again, remember, there's contingencies with what we talked about there. And overall, as long as we're below 3,300, I pretty much remain keep positions bearish. However, if you start jumping up back above 33, let's just call it 32.75 right over here, this kind of block down around here, then yes, things could very easily test 3,400ish area. Not really saying too much, but as long as you're below 3,600 from a higher time frame perspective, yes, you're still fucking bearish. So again, still looking at this next blue box territory as our next potential bottoming, perhaps even reversal zone right over here. Although my opinion is that we probably do go lower over time, and again, that's that secondary component of time being very, very crucial and critical. But hey, this guy right over here actually could be breaching this this diagonal trend line later tonight. Could it be official? who knows? But we'll just have to have to wait and see. So again, that's what I'm looking at right over there. As long as we're below, again, that 3,300 mark, yes, I do look towards this blue box as the next area. Probably like a slow, sludgy move down around there. Lots of measure moves taking you down there. You're in a bearish market. All sorts of lower highs over the course of the last past year. So in my opinion, that will be my disposition until proven otherwise. So that's going to do it for this morning. Hope this one finds you well. Hope everyone's having the best Sunday possible. Again, thank you for bearing with me on this, no pun intended, but on this little bit of a slower paced video this morning. Hope everyone's having the best day possible, and I'll be back on later with some more analysis. Look forward to see you guys soon, and take care.